let's talk about the post-gap range breakout. This is a fantastic method and entry tactic that can allow you to position in very promising names after there's a game-changing catalyst that causes a gap up, and ideally a strong trend that happens after that gap as more and more institutions start building positions because their interpretation of that company has completely changed, their valuation of that company has changed because of whatever the catalyst was, and based on their models, they have to continue to build positions. That's the kind of market characteristic we're looking to capture with this setup and entry tactic. And the post-gap range breakout is just a way to join on for that trend, join on for the ride while managing risk logically and tightly. So what is the post-gap range breakout? Basically, as I mentioned, we need a game-changing catalyst and gap up due to that catalyst. And this could be an earnings report. This could be a partnership announcement. This could be an investment from another company. We've seen a lot of recent ones due to AI-related news, whether it's partnership opportunities with OpenAI, investments from NVIDIA. There's been a lot of great examples recently. This one in particular, FLS, which we'll kind of be using as a case study, is due to a very strong earnings report where guidance was increased. This is also in theme with regards to nuclear energy and AI data centers. They're involved in cooling here. And you can see a very strong gap, strength right off the open. That's great to see. A very strong day one, which is the day of that gap. That's why I refer to as day one. And I believe it was up almost 20% from open to close. And then what I love, and this is the post-gap range that we're breaking out from, the post-gap range happens right here, these 2 days. Look how tight this consolidation and contraction was relative to the strong bar here. There was barely any give back, and that really shows you that there's a lack of sellers. And after this post-gap range, we had today here the post-gap range breakout through the pivot, which is the HVC. I know there's a lot of acronyms I'm throwing at right at you, but the HVC is basically the close of the high volume day, and the high volume day occurs because of earnings here. And this day we broke through that level, that closing price, and also through the inside day high, which is kind of a lower pivot within this tight contraction. So again, to keep it as simple as possible, we're looking for a game-changing catalyst, a strong gap up, strong performance, a range to form, whether that's right here below HVC or a little bit lower, and then a range breakout through a pivot that you can identify relating to that range. So expansion, contraction, and then buy the expansion from the contraction. That's it in its simplest. And what I love about FLS here is how tight this contraction was and how little give back of this bar this contraction took. Ideally, tomorrow this falls through to the upside and really kicks into gear and starts a strong trend. But it's within its rights to consolidate a little bit and then reconfirm. But if we do violate the HVC, this level here, or especially where the stop would be, which would be this low of the day here of the breakout, that would be a sign that this setup has failed. And you'd either look for another future setup or just move on to another opportunity. But so far, this is a successful post-gap range breakout from the pivot. We're up about 4.5%. And the stop loss on that entry would be about 1.6%. So almost already 3-to-1 reward to risk. And strong move, strong close so far. So again, watching for fall through or tightness and then reconfirmation and then a trend above the moving averages. What I also like about this setup is the overall chart pattern. We've got a big base. If we go over to a weekly chart, this is the breakout here. We've got this long base, and this stock hasn't done much for quite some time. But obviously this theme is in play that it's participating in, and we're seeing that reflected in the earnings growth and sales growth. And speaking of the earnings growth and sales growth, I have a handy AI prompt that I like to use to break down an earnings report to kind of see if there's anything that stands out and anything that would potentially indicate that we could have a very strong gap or move and then a strong trend from that move. And this is the prompt right here. I'll drop it down below in the comment section. It's basically this: analyze FLS's most recent earnings report. What stands out as important or insignificant? What did they say about revenue, earnings growth, margins, buybacks, new products/developments, or future guidance? Make each of these a section to cover and use 20 bullets total. And it breaks down nicely the earnings report and highlights, key information. And basically from these, you're able to see that, there's revenue growth, strong earnings growth, the backlog's increasing, margins are improving, and they're experiencing tailwinds because of their involvement in power and nuclear demand due to AI data center electrification. That's a growth tailwind. And we also have strong buybacks here. So basically, very strong action here. And they raised their guidance. That's key. That often is a driving factor of these earnings gaps that ultimately turn into strong trends. So whenever you see increased guidance, that should stand out to you. So again, this is a handy prompt here. I'll be sharing this and a few others in actually a completely free webinar that I'm doing this upcoming weekend relating to trading earnings gaps, not only the post-gap range breakout, but also how to be involved in day one as well, and ideally capture a move like this, and then maybe be looking to add on the post-gap range breakout. So again, completely free. The link to that is down below the description, and I look forward to seeing you guys over there at that webinar. But here is that prompt again. I'll put it in the description for you to copy and paste, and then you simply want to just replace that stock ticker with whatever stock that you want to consider. So that is FLS. And to use a few more historical examples to kind of bring this to light, we've got another recent one in INTC. The catalyst here was the partnership with NVIDIA. They invested in INTC. And here is a good variation and good thing to go over, because instead of a strong day one bar that is strong right off the open, and then the post gap range happens right near the high of the day one, here we have a little bit of a sell off after the open, and then the range forms after a little bit of a pullback. Still very strong, because look how big this gap was, and there wasn't too much give back, but a different variation of this setup, and it's why it's a good example. Here is the consolidation. You can see the pivot. Let's zoom in right here. This is the pivot, and you can see it's a little bit early because this is an alert, and I like to be alerted a little bit before it actually pushes through the pivot, but this becomes your pivot where these highs are, and then this is the data buy. This is the post-gap range breakout for this example with INTC, and from this, I believe we're up about 25 to 30% in just a matter of a few weeks. Yep, about 30%. And trending nicely. So this is ideally what we like to see and hope to see with FLS, is we get follow through the next day and we begin trending above the moving averages and ideally start a longer term uptrend. Going back to FLS, what I really like about this is the big base that's coming from. I like the constructiveness of the base as well. I really like this failed breakdown. You can see after this bar, what would your expectation be? Well, fall through to the downside. Instead of that, we hold, we consolidate, we tighten, and then we continue this base until the earnings report, and then see a strong breakout through these highs. And this volume ideally is the highest volume in over a year, or highest volume ever. But this volume actually was much higher. But if you take a look at it in context, this volume is the highest since 2021, excluding this day right here. So still very high volume, and you can see actually an increase in average volume in the later stages of the space, which is another edge characteristic to keep an eye on as you're analyzing a base. So good overall formation with FLS. And again, the big thing is that it's part of a leading theme. Nuclear power, AI data centers, they're involved in that. So that's kind of what's driving the strength in the business, which translates over to this earnings gap that we can profit from as traders. A few other examples. Let's bring up Reddit. This is one I traded back in 2024, already had a position in it, and we had a strong gap up, very strong action. I believe it was his first profitable quarter, which often leads to an amazing move, so keep an eye out for that. And then here, you can see we pull back over the next few days, tightened up. Look how tight these bars are, and then this becomes the pivot, and I added this day, and there's a nice trend after this occurrence. Palantir is another example that I like to bring up, just because it led to this 2,000% move that we've seen. The very beginning of this was a post-gap range breakout. So where was it? Well, we're in a stage one consolidation. It's an unprofitable company. And then here we go, boom, gap up on earnings, first profitable quarter, announcements related to AI, the AI stuff that they have going on. And what do we have here? We push up higher, pull back, hold the 10 EMA, and then form a tight range here. This is the pivot. You can see a tight inside bar here right before the breakout. You often see these type of priming patterns before we actually kick off and get going. And then this is the post-gap range breakout. Here's the gap, consolidation, tightness, buy from the tightness, buy from the contraction, and benefit from the expansion. And again, this was the very beginning of the amazing model book move that it experienced. And not only that, if you're just a swing trader and aren't looking to capture, a multi-year move, this was up about 70% over the next, few weeks. So whatever your style is, whether you're a day trader, swing trader or position trader, these post-gap range breakouts are fantastic that allow you to position in a high momentum, promising stock while managing risk tightly and logically. Because if it broke this low right here, you're out, you're moving on to the next setup, you're moving on to the next stock. So going back to FLS, just to recap here, really like the strength off the open here, the overall base pattern, big base that it was in. And I love how tight this was below the HVC. So the HVC, again, is the close of this high volume day. We get this question quite a bit. It's a term developed by Amit Rai. And we're looking for a big volume move, which this happened to be on earnings. And this becomes a very key level. If you go back and study a lot of Bomblook moves, you'll see that whenever there's a big volume gap, then the stock really tends to respect that level, either consolidating below it and popping through it, or on a pullback, say it moved higher and then pull back in. That HVC would be a key level that you could position against, and it would tend to respect. The ultimate example of this is if we bring up ELF and go back to its amazing move in 2022. This will be pretty mind-blowing for a few folks. During this move, this loved to trend, pull back to the HVC that it just had from its earnings gap, and then continue on with the trend. And what you want to do, again, is just look for a high volume move, often associated with an earnings report, draw that over, and look how it consolidates. This is actually a post-gap range breakout right here. It respected the HVC, reclaimed it, and then pushed higher. But then we get another pullback to the HVC, and then it begins to trend. Then what happens? We get another earnings day and it looks to trend here. And if we draw in the HVC and zoom out, where does it pull back to? Right to the HVC. So this is a significant level. And why it's significant is because this day is huge volume. And who creates huge volume and the big moves in the market? The big institutions. So this is a level that they're deciding to close that stock at on that day. And they're willing to aggressively build shares and build their positions on. So when we get a pullback to that level that they're comfortable adding to, because they have a strong vision for the company, there's a game-changing report, game-changing catalyst, they're looking to increase their position. When we pull back to the level, they're going to make a stand at that point, consolidate, absorb any supply, and the stock will keep on going. And I think it did it a couple more times. Here's the next earnings gap in the move. What happened? Pull back to the HVC, takes off. And I believe it does it maybe one or two more times right here. So a little bit of an undercut. Again, it's later in the move here, but undercuts, reclaims the HVC, and off to the races. And then we do ultimately break down. And what's interesting here is we held above the HVC, and then as soon as we break down, that's when the trend really ends and we need a longer base. So whenever you get a big earnings move or a big volume move, draw in a line, a pivot from that HVC, and you'll be amazed about how much the market respects or takes into account that level as we go. So getting into the actual trade execution of this range breakout, basically it would come on your radar here through monitoring recent gap ups. And I've got a specific dashboard here where I look for post-gap movers and pre-market movers. We've got a few names here gapping up. Those would be potential day ones. And then what I do is I keep a list and keep tracking recent gaps, looking for those ranges to form. And so once you've identified that there's a range forming, the next step is to monitor it and see if it's ready and primed to go. And this was so tight. This was on my focus list for today. And I love seeing how, contracted it was, RMV going down to zero. Basically, again, strong expansion, tight contraction. And now what I'm looking for is there an entry tactic I can use? Yes, the range breakout. So I have to decide what my pivots are. And HVC is one of them. And then also the high of that inside day would be a very short-term pivot. So once I've got that set, it's on my focus list for the next day. Now it's all about execution. Even the day before, you could go ahead and determine what is my sizing going to be for this type of name. You have a strong action off lows. That's a plus for it. You've got the AI theme that it's riding that tailwind. That's another plus for it. So maybe a 10, 15% name. This isn't a name that's going to be like a much bigger position like a Tesla, which is so liquid. This is a little bit more unknown, a little bit of a smaller company here. The market cap is $8 billion name, so not tiny, but this would be more for me a 10-15% position, and that would be kind of what I would use to play this. So that's kind of figured out already. You kind of know how many shares you're going to buy based on your entry point, based on your likely stop loss, which would either be the inside day low, if you're using that, about 2.8% risk, or it could be tighter based on using the low of the day of the actual breakout, which is my typical process. So with that set, let's go ahead and say, okay, it's the morning. We're almost done a pre-market. This is going to be high on my focus list. Let's go ahead and monitor the intraday price action. So off the open, we're looking for push through that level set on the daily chart. So going over to a 5-minute time frame, and let's go over here. Let's walk through it bar by bar. And here is the post gap range on an intraday time frame. We see strong expansion up, and then this big basing period. This is the high of the inside day here. We overcut it a little bit, but this becomes the intraday pivot that you would mark out the day before. So this is either your buy point, or really HVC is the key level to watch, since that's the big level on the daily chart. The inside day high would be more for watching for push through that to say, okay, I'm ready. I'm going to get my order ready for my broker. So let's go ahead and walk through the early bars of price action. This is still the end of the day before during the inside day. All right. So this is what you would see. Here's the first 5-minute bar. We try to push higher, but don't get close to the HVC and basically overshoot and then fail this inside day high pivot. And this is a bad bar closing near lows. The expectation is fall through to the downside. But if we don't, that would be a tell that things are ready to get going the other way. A failed breakdown leads to fast moves the other way. And what happens in the next bar? Boom, we actually reclaim that inside bar high. So that could be a potential entry here on an undercut and reclaim of the daily anchor VWAP. And aggressive traders would be starting to build their position here. We fall through to the upside, again, could add a little bit more. And then boom, we have a breakout through the HVC. So if you're waiting for that level, that would be your spot to enter, setting your stop at the low of the day, or really this higher low here, which again would be about 1.5% risk, which is perfect. That's very tight and a logical price action. From here, we're expecting immediate movement higher, but we're accepting any volatility that holds above our stop loss. We've accepted that risk, we've determined it in advance, and we're willing to give this a shot. We don't want to be shaken out unnecessarily. We're willing to give it that back and give it that room. But ideally, we just see it take off and trend throughout the day. Let's see what happens. We have nice follow through, breaking through R2, through R1, R2. And then boom, we get the start of a move down. So again, you might be feeling it in the moment, you're feeling good. It's pushed off of your entry point right here, but now is pulling back and testing it. But again, you have to accept the risk and be willing to give it back to your stop loss here, because it's doing nothing wrong. It's just pulling back intraday, holding above your stop loss. We continue pulling back. Again, this isn't feeling good. It feels like it might fail, but again, you've accepted that risk and you have to understand that in the moment. All right, then we start to hold here. We start to build around R1. There's no fall through to the downside. We've pulled below the HVC, but not too much below it. So now we're watching for respect for that level and a reclaim at that level, and then that trend that we hope to see intraday. All right, still range building, and then boom, nice outside bar here. And now we want to get going. We've got an outside bar pushing above this range, reclaiming that HVC, and now we want to see it push higher away from our cost basis. And this would be another entry point if you haven't already entered. You see a nice range near R1, reclaim the HVC. That would be a spot to enter, either managing risk very tightly at this. That'd be really almost too tight, or at the low of the day here. All right. And then boom, we start trending above the anchored VWAP, above the intraday moving averages. Things are looking good. And now we can breathe a little bit. We've got some nice cushion. And we're looking for a strong close. And we get that. So we get a close basically right near highs, well above anchored VWAP. We had a nice intraday base here, constructive price and volume action intraday. So that's how to kind of handle that intraday and off the open move. Entries either very quick right here, or really here through HVC, accepting your risk, letting it do its thing, and then we got that strong trend, strong close to end out the session. And I love seeing a trend above the anchored VWAP just like this. So again, going back to the daily chart, we'd love to see fall through the next day, or tightness, a tight inside day, and then reconfirmation. But what we expect to see here is the start of a longer term trend and longer term move. And going to a weekly chart, this is a big consolidation. The highs were back in 2014. We're potentially changing character here and waking this stock up as it reflects the new theme that is in play. And we'd love to see consolidation and a strong trend starting from this spot. So going back to a daily, just to wrap things up. Again, the whole point of this video is to emphasize and really talk about how we're looking for expansion, contraction, and then buying from that contraction as we start to expand again after a game-changing catalyst. And this is something that day traders can use, swing traders can use, and position traders can use as well to position in a name just like this while managing risk logically and tightly. So hopefully this has been helpful for you guys. Again, I'm going to go into more detail and talk about more variations and different ways to trade earnings gaps and catalyst gaps in the weekend webinar. Again, it's 100% free. The link to that and the link to register is down below in the description, and I hope to see you guys there. Thanks again for tuning in. Leave a like down below if you enjoyed. Subscribe if you're new to the channel, and I'll see you guys in future videos. Take care. Bye.